House at the Wall Street Journal. I want to ask about the economic projections, and I realize these are more of an educated guess at this point, but they suggest the committee sees quite a large output gap over the next 2 years. And yet the committee did not take any steps today to reinforce your forward guidance. And so my questions are, first, what are you hoping to learn by waiting? Second, how might that change your response? And third, how close is the committee to reaching a decision on a more concrete forward guidance and whether yield caps might reinforce that guidance?
So first, I would say that we think that monetary policy today is currently well positioned to support the economy in this challenging time. If we didn't think that, of course, we would change our policy now. As you know, we lowered our policy rate very quickly than others, to the effect of lower bound. And we said that we'll keep it there until the economy has weathered the effects of the virus and is on track to achieve our goals. You can see that in the dot plot, as I think you pointed out, that overwhelmingly FOMC participants expect as their baseline expectation no rate increase at least through 2022. And if you look at surveys of forecasters and market participants, financial market prices, et cetera, those also appropriately reflect a long spell with rates at the effective lower bound. So the first thing is monetary policy is in a good place, and that's well understood in the markets. Secondly, we've also taken strong measures to support the flow of credit in the economy, as I mentioned. And third, we're continuing asset prices in coming months at a relatively high level. So for all those reasons, we feel like policy is now in a good place. So as we look ahead, we see that the path ahead for the economy is highly uncertain and continues to depend to a really significant degree on the path of the pandemic. So at this meeting, what we did was, as I mentioned, we looked in some depth at forward guidance and asset purchases and looked carefully at those. We also received a briefing on the historical experience with yield curve control. And we'll continue those discussions in upcoming meetings and evaluate our stance and communications as more information about the trajectory of the economy becomes available. I would just say, in terms of what we're looking for, we expect to get a better understanding of the economy's trajectory, and particularly how we should best deploy those tools to achieve those goals. So that's really what we're looking to achieve. And as you can see, we're actively at work on that.